Well, I will let all of our guests get situated. Thank you all, obviously, for coming, listening to Mike earlier, talk through everything that's going on at Pith, and thank you for joining us for this panel. So I'm Nam. I'm one of the core contributors at Bonk, and right now I get to moderate this panel of collectively my bags. So I'm very excited to hear about all of these various different projects. So Larry, I'll start off with you if you want to give a quick overview of Cube and all of your roles there.
Sure, thanks. My name is Larry, CTO and co-founder of Cube.Exchange. We're a hybrid exchange, so centralized order books, decentralized custody and settlement. I work on engineering as much as I can, and everything else that comes with the role, I suppose.
Perfect. Cindy out of Drift.
Hey everyone, I'm Cindy. I'm one of the co-founders of Drift. We're the largest perpetual DEX on Solana with fully on-chain order book and settlement. We've been around since 2021, so it's been a very long time in the coming. Very excited to chat about on-chain NASDAQ today.
And I'm Mike, probably just heard, CEO of Douro Labs, and we're building the Pith network.
I'm Barrett. I'm a co-founder at Ranger. We're a DeFi trading terminal and perps aggregator. Launching pretty soon here on Solana, integrating great dexes like Drift right here.
Perfect. So the title of the panel and what we're coming from is basically talking over the idea of building the NASDAQ on-chain. So me, when I came to Solana, first off, there was this idea of it's a place where you're supposed to trade anything in these futures markets, and it's designed to be at the speed of the NASDAQ, 400 milliseconds, as quick as you can. What we talk a little bit about, and obviously, Mike, what you highlighted for specifically around the congestion and the choices for Pith, why build Pith's infrastructure, but for the rest of our panelists, why also build utilizing Solana for the exchanges? There are DEXs, there's perpetual markets on various other areas. Like, why do you all choose Solana as the narrative? And I'll start with Larry to give you there.
Okay. I might have a hot take for a lot of this panel, so bear with me. So 400 milliseconds is fast and 200 milliseconds is faster. That's not the speed that the NASDAQ operates at. NASDAQ operates sub-millisecond, maybe in the single-digit micros, right, if you're talking really quick. So in some sense, yes, Solana is a very high-throughput chain, and we use it for our ledger of transactions and settled trades, but we don't try to execute order books on there, and that'll probably be a theme that I point to readily. I think Solana instead lends itself to other mechanisms for price discovery. I'm sure everybody here has kind of found that in different ways.
Barrett, when you're working through aggregating everything for these various different DEXs, do you think that Sol's still the best choice? Do you think it's something to work on improvements there? Or how can you talk about building one layer above something like what Cindy and Larry are building on top of, utilizing, obviously, stuff like Pith?
Yeah, I mean, there's always room for improvement, right? Like, as Larry mentioned, it's not as fast as the NASDAQ today. Will we get there in the future? Maybe, but there's always room for improvements on speed, and then especially liquidity, which I think is probably like the biggest pain point, and like why an aggregator on the perp side of things is like super important. But yeah, I mean, like you want to be on a chain that is incredibly fast and incredibly cheap if you're going to enable traders to access margin. You need to be able to enter and exit a position. You need to manage like congestion appropriately, which I think is also things that Solana is like working on improving. And there's definitely some exciting updates there as well that are coming out in the near term. But yeah, I mean, at the end of the day, you want to have like the best user experience possible, and enabling that for DeFi traders is pretty seamless, like on Solana.
Perfect. Mike, we talked a little bit, you talked a little bit earlier, going through the previous roadmap and everything that Pith is doing. With what Barrett and Larry are highlighting in terms of how do we get to sub-millisecond pricing feeds? Is that through the security that you were highlighting in terms of like making sure that the trusted like validators essentially of Pith pricing is the way to go forward? But like, what is the steps needed to get us to the promised land of sub-millisecond trading on Sol?
So you have to make the decision of how decentralized you want to be in order to make that call. Because if you do everything off-chain, you can easily remove all the latency. If it's important for you to have full geographical distribution, the fastest we're going to get to is like, I don't know, 150, 200 milliseconds. So, Solana has, on the one hand, been criticized for being centralized, but it's also very decentralized geographically from a validator standpoint. And that's why the block times are what they are. So I think it's more important to benchmark to other blockchains. And as long as you are at the fastest speeds with the properties that you're trying to design for, then it's optimal. If you need to start making trade-offs, I think that it's important to do so with a mind on what you're trading off. So if Pyth were to be completely off-chain, you would have trust assumptions that you would have to deal with. We don't want that to be the case. We want it to be fully auditable. We want it to be secured. And we want it to be something that the trading firms that participate and they distribute their data to, they can all trust without having to think that there's a third party behind it. And that's really important. So in order to be able to scale, I think it happens gradually. The idea for Solana was always, believe in Moore's law, you get better hardware, it gets cheaper and faster over time. I think it's one of those gradually until there's a step change. And so we constantly monitor different potential homes for how to run Pyth faster. We always want it to be faster. We want it to, but maintain those same properties. And with, like, say, FireDancer or FrankenDancer, PythNet is already experimenting with FrankenDancer to see how fast we can improve some of the block times. But it's still built on the same SVM, properties or same SVM environment. So I don't think that I've seen anyone come out with something that is much better. All of high throughput DeFi has been innovated on Solana. Every other chain has just started to do it because of the table stakes, and they usually make some sort of a trade-off, and it's a single sequencer or a single node operating an off-chain oracle or something like that.
Perfect. Touching into oracles, Cindy, so we've heard obviously a lot of people say like, it's probably not going to happen, right? Getting to that, sub millisecond area. And that means that there's a lag between, when people could be potentially executing a trade and prices changing, in various different ways. You've got tokens like Sol that are listed on, hundreds of centralized exchanges. How do you handle that versus something, how do you handle the difference between spot, perpetual pricings, all these various different things as what people are probably going to go to as a source of truth, especially if something like what Barrett's building at Ranger?
Yeah, I think there's a bit of a misconception that you need oracle prices to track the movement of the contract, like one-to-one at all times. And I think even between centralized exchanges, there's lags in prices all the time. Funding rates actually only settle hourly. So I think there's an overemphasis on potentially over-engineering for some of these things. Like, okay, we're going to get exact oracle price at this slot or this at this moment versus thinking about it from a bigger picture. When liquidations happen, that's actually the most important times that the oracles should line up with the prices on the exchange. And naturally, there's going to be drifts during those times. But what's important is that the exchange has enough of a liquidation mechanism backstop to be able to handle differences during those times. It's actually not as important during, I would say, normal trading conditions to think about it. So when we think about trade-offs at the end of the day, are we optimizing for each fill at every moment, or are we optimizing for a generally decentralized experience with performance enabled to a certain extent, as just to be better than the competitors on other platforms? Because at the end of the day, what does on-chain NASDAQ really mean, right? If you're building a single sequencer L2 or an L1 with a single validator, we don't really think that that's an improvement from centralized exchanges. So rather than over-engineering for optimizing small details, we prefer to make trade-offs at a higher level and wait for exchange infrastructure and L1 infrastructure to grow. If you look at ETH versus Sol improvements in blockchain speed have 10x in the past every couple of years, right? And it's only going to get faster. So we're very bullish on innovators on the L1 side to solve the decentralization and speed problems.
Barrett, not that we've ever had any experience with leverage trading as proud enjoyers of the United States. You can obviously be in situations where you're going to be aggregating multiple different competing platforms that might be offering different prices for different assets. And with something like liquidations where you can get bottom ticked at, a cent or a fraction of a cent at something like, one of these futures contracts, how are you dealing with potentially the fact that, if I'm using a Pith Oracle instead of a switchboard Oracle, maybe I don't get liquidated in high volatility situations? How does a Ranger approach something like that?
So Ranger doesn't actually make any sort of decision on like how we liquidate people, or we don't actually, like, Ranger is not a smart contract, right? It's a user interface, it's a terminal, and just like aggregating these underlying protocols, right? So we just default to however the underlying platform like Drift or Zeta or Mango, et cetera, choose to like perform their liquidations. We just provide that information to the end user of Ranger. Because we don't want to make any assumptions. We're not like handling anything on the smart contract side of things, other than just being able to provide a better interface and like deeper liquidity, since we are an aggregator across those platforms.
Perfect. So whenever I get liquidated, I will blame Larry and or Cindy, depending on which one I'm using at the time.
Yeah, it won't be Ranger's fault. I'll tell you that.
Good. As long as it's not to you, we're fine. And Mike's purely just providing the infrastructure for the pricing. It's not his fault either.
All those guys.
It was just the code.
Yeah, just execute. So we've obviously seen a massive resurgence, especially in the last 72 hours, right, of various different political and famous individual meme coins, right? I don't know what the correct classification for this category is. I'm sure someone else will figure it out. When we talk about this idea of like, NASDAQ on the blockchain, right? It's the idea of, are we trading lean hogs futures, based around the ideas of what those should be pricing at? Or are we trading, various different meme coins? Like, what's kind of your guys' assumption of the current status of like where trading volumes are and what people are utilizing these platforms for versus what we are talking about for, the future of these kind of protocols? And Larry, I'll give you the first crack at that, because Cube is an enjoyer of the memes, to my understanding.
Yeah, I think we tend to refer to them as community tokens.
Good branding.
Community projects, yeah. I think there's a lot of questions. Could we pick one?
Yeah, I'll simplify it. We talk about the NASDAQ on the blockchain, right, as this end goal. But right now people are trading memes. They're trading pictures of images of celebrity. Like, are we at a good spot? Should we be changing anything about the current ways that people are using Solana? Is pump.fun, like, is that where we should be genuinely in terms of like how people are using the chain? Or do you think that we should be changing how like the community is utilizing Solana right now?
I think the ability to generate financialize these community tokens is definitely an interesting phenomena that's arisen from blockchain in general, not necessarily any particular project built on top of it, where I think kind of one of the main selling points of blockchain is that ability to quickly innovate on these new forms of monetization, I suppose. So whether that be from the original AMMs, which I think is actually more important for these meme coins than probably NASDAQ is, given that the liquidity for these things tends to be so small, so low, that price discovery is in fact like almost impossible to achieve in normal market making conditions. So building like perpetuals or other leveraged products on top of meme coins is almost impossible because like the spot market just doesn't exist. So it's definitely like an interesting space to experiment in and see where blockchain as a whole shines. And I don't think the NASDAQ would ever adopt that type of thing because they're not suited for it. And that's a very different story for us.
Perfect. We're trading the pink sheets more than anything else. Cindy, when we go into talking about, the listings, right? The ideas of spot versus perpetual. Most tokens and their communities are making a big deal about where somewhere gets, listed, where it's available to trade, something like that. How does Drift choose to approach projects looking for listings? Like, how do you make the choice of what users trade on the platform? I guess is the biggest question.
Yeah, ultimately, going back to the meme coin question to answer that first, I love them. And I think that instead of thinking about blockchains and indexes as kind of the future of NASDAQ, we should really not be looking backwards, right? We should be looking at what blockchains enable that permissioned listings can't. And that goes into our philosophy on listings, which is that we shouldn't be the arbiters of who gets listed or what gets listed on a platform. People should be able to make the determination themselves, own the listing process, whether that's through governance. We just launched governance a couple of weeks ago, and now anyone can vote for a new market to be listed. Anyone can provide liquidity in a decentralized way. You don't need to pay market makers anymore to make sure that there's liquidity in the platform. So that's super important to us because we're building something that enables the type of trading that hasn't been done before. Meme coins are essentially unbounded prediction markets, and we believe that ability to continuously create these things are extremely existential to blockchains. So yeah, we want to allow anyone to list anything that they want.
Perfect. Mike, I think kind of one of the things that I want to go into, you talked about the governance addition for new listings, pricing feeds for all these different areas. Is there a level that something needs to get to as a project, like for teams that are getting ready to found their own tokens, getting ready to launch their own things? Like, where do you think they should start considering something like using Pyth pricing feeds? Should that be minute one, or do they need to have a bigger goal on something else? Like, how do you want projects to kind of approach Pyth governance in general?
Yeah, so it's very much demand driven, and like the portfolio. Hello. So.
Testing.
We
Thanks.
appear to be having some.
Me. Wow. All right. I mean, it's a tiny room. Yeah. So there's 500 symbols. 75% of them are crypto today on Pyth. 25% of them are real world assets, so equities, FX commodities, metals, and those are really just like what's possible. So it always should be this mix of like what's possible tomorrow. If you want to go build the NASDAQ and you actually wanted to have some equities that you can have access to, versus like what's actually demanded today, and that's where the bulk majority comes from. The idea for decentralized governance is, that should be taken over by the community. You can put in things for, if we know that there's a token that's listing in the future and you want to have it up day one, you can propose that, and you can propose it with incentives. Say, if we can get enough publishers to list this day one, we're willing to put in some incentive. And we've seen some precedent for that in governance already. So I think that that's a pretty good model, right? It works for the demand of, if you want DeFi to be able to trade any sort of token that is going to get listed on centralized exchange or on other DeFi exchanges, like Pyth is a great avenue to be able to do that. But you need to have enough sources, and the sources are coming from trading firms or the exchanges. So you can either incentivize the sources, or you can incentivize through the Oracle itself the trading firms to go out and start trading them. And it's a very clean model. We don't have to get involved in it, and it has the right forces for people to have the incentive. But one thing I also want to go back to your question about the meme coin and are we at the complete state? Obviously, no. It is. I agree with Cindy. This is cool because this is an innovation. The fact that the meme coins of stocks, you have to go basically pick zombie stocks, and then you have to apply your meme to them. GameStop is is a zombie stock, and so everyone just piled into it. And now you don't have to do that. You can actually just come up with the name of the thing that you want to do, and you don't have to have this collateral damage where there's this company makes all this money that nobody really ever wanted to happen. They just wanted to have the the ability to trade. So I think that's important. People want that. It's not going away. There's a better use case for it. So when are we going to have a demand for equities? And it's certainly not in the U.S. The NASDAQ is pretty good for people in the U.S. In countries where you've got access to interactive brokers, it's also probably pretty good. It's where you don't have access to capital markets or interesting capital markets where it's not good. And that's where I think you need to solve it. And that's really what NASDAQ on-chain means to me. It's a much better use case for people in certain areas who have very limited access to good capital markets. And they get access to buy into NVIDIA. It's a very important thing for somebody in any kind of country to be able to have access to it. So it's so transformational as a technology and as a company, or Tesla, they're global. If you don't have access to be able to speculate on it, it's a huge disadvantage to you. Like if you have to bet on the NVIDIA of Indonesia, it's not great. So you're going to be resolved to only messing around with meme coins and things. So I think it's going to be some combination of solving the actual problem that's not actually fixing the NASDAQ. NASDAQ's not broken. It can be better, and decentralization, not having to rely on a single monopolistic counterparty, would be great. But I think it's going to be the pain point from a user's perspective that really drives it more than anything else.
So when you go into, let's say, like the serious products, right? Everybody makes a big deal about real world assets, whether that's a tokenized gold contract or something like Parcel in terms of like the real estate futures, right? A lot of people would say that like the existing pricing feeds that exist, right? Like if I'm looking up the spot price of gold, am I using Google Finance or something, right? Am I just like Googling what is the price of gold, or do I need to get to the point of like, basically at what point do we need to decentralize those price feeds for exotics that don't exist? Like I understand the Pith use case for, I create a new token, I need to figure out how the valuation of that token is used. At what point do we, or can we even utilize like the existing pricing methods for the real world assets that people want to bring on chain?
Well, Oracle is going to be designed to stitch markets together, right? So it's...
We're good?
Oh, yeah. We're back. So the Oracle is what it's doing is it's providing the global reference price, right? So you've got a pari-mutuel market and you're trading out of whack. You've got funding rates that can bring it back into line by by nudging the longs versus the shorts to do that. But it has to exist somewhere else. So when you're talking about frontier markets that don't exist anywhere, there's not like an Oracle that's going to come up with the pricing first. It needs to be some sort of an execution venue that allows people to transfer that risk. And then the Oracle can stitch it all together and say, hey, because we have all this fragmentation, this is the global price that everyone should be referring to. And so I think like for gold, for instance, like there's very liquid markets. You can trade gold as a currency, as like XAU. And, we have markets for that on Pith. If you wanted something that's like super long tail, like the price of like watches or things like that, it's not liquid. And so like you have to go to a different means for it.
Barrett immediately perked up at watches more than anything else there. So I'll bring it for the last few minutes to a question here. We've talked about improving speed, right? Number go down makes chain better, allegedly. If we can make chain faster, this is a higher improvement. What currently would you want to build if we can get to the point of like sub-second latency, right? If we get to the idea of like actually this NASDAQ speed execution, is there something that you would add to your product that doesn't exist right now, or is everything perfect? That is also an acceptable answer. Again, for my bags.
I think for like Ranger's standpoint, there's nothing that we would necessarily add, right? Again, we are not focused on building on-chain smart contracts, but we are integrating like these protocols, right? And so I definitely think that there's a number of things that can change on the underlying protocols, but I think realistically speaking, they designed their mechanisms to kind of scale with speed, right? Like it's not like Drift, for example, is like going to make a decision whether like, if the chain all of a sudden goes faster, like my product is worse, right? And so they like are building things because we all came to Solana because it was the fastest chain at the time, and like it's continued to improve its like TPS over like the many years that we've all been here. And so I think like most of the DeFi founders and people like building like DeFi projects are building for anticipation of lower latency anyway. And so I don't think it's like, now I can add more features, right? It's, now my app that I built for something to actually go at a faster speed, right, works better. And with that, like, sure, they can like do more things for like bringing more liquidity because the latency has dropped and the trading experience has improved, right? But they're not like necessarily adding features to their platforms because like, now like I went from 400 milliseconds to 200 milliseconds or 150 milliseconds, right?
Makes sense.
Yeah, Pyth just always needs to get faster and have more symbols. And so we are constantly trying to improve the product from that perspective. If we can get down to sub-millisecond speeds, I think that opens up a door for a UX that actually then maybe makes the NASDAQ worth switching from. What I described before is solving a problem for people that don't have access to the NASDAQ, and I think we're in a very good spot to do that today. But in order to be able to convert people from NASDAQ, I think you need to be at feature parity at some point. And I think that's possible. But I don't think it needs to happen today. I think it can be a gradual process because everything around blockchains is still relatively early, and you have to get the awareness and build the trust over years and years of operating at very institutional levels of service, where people can really start to trust things. And you get central banks or big asset managers that are now moving tremendous positions on those services. But I think that as infrastructure and blockchains get better, that happens as a gradual process. I think that can be very organic.
Yeah, from our perspective, the reason that we've continued to build on an L1 is because we believe that you need to build a product where the assets are at, instead of forcing people to bridge and have wrapped tokens, wrapped versions of their assets somewhere else. And what our mission in terms of increasing speed is how can we do that without compromising the fact that we want to meet the users and the capital where it is. And so there's a lot of cool things going on in like the Solana scaling land, especially when it comes to apps, thinking about what they could do to make their app better in the context of being within Solana. So I think stuff that Pythnet is doing is really cool, where your execution happens in another environment that is slightly lower risk. But right now, we have almost like an intense base layer called keepers that match orders together and bring them back on chain, except that the actual execution is still limited to the block time. So if we could abstract more of that order matching away from L1 and potentially have another network that matches users before the block settles, that could be really interesting. So there's a lot of research that we're doing in this department to ensure that the speed is continuously improving while also maintaining our position on the L1 itself.
For us, it doesn't really matter too much if Solana block time improves. We are agnostic, at least in our terms of our match speed. So we're a single-digit microsecond regardless. But to clarify the point, I guess I started with, which is that I don't think that's the thing that blockchain projects should be aiming for, which is we should not be aiming to replicate NASDAQ on chain from the latency perspective. Like, I don't think that's where the scalability of blockchains actually lives. And I think everybody's pretty much said the exact same thing. Like, the drift model is not a single order book with NBBO order books, right? It's a very different model for how price discovery happens. And I think that's that type of innovation where AMMs were the start, and where we are today is where we are. That's what's really exciting.
It's a pretty succinct way of saying we don't need to build NASDAQ on chain. So good panel, well done. Everybody solved the problem. Nice, clean, crisp, 25 minutes. Good to go. In that time, obviously, thank you all for coming here and listening to us talk. Thank you to all of my wonderful panelists for listening to my terrible jokes. And thanks to Solana Snapshot for having us out. Hope you all enjoy the rest of your day.